LiteFinance,
Hello, it's Monday, January 22nd, and it is time to start the market forecast. So, we will begin as usual with the calendar. So today we have no major events. On Tuesday, Bank of Japan will publish their interest rate decision as well as CPI inflation data. On Wednesday, we will receive PMI data from major European economies and the US. Still on Wednesday, Bank of Canada will make the decision what they will do about their rates, where most likely, as well as it is in the case with the Fed, we will see no changes. Thursday will be the most important day of the week since we will get ECB rate decision and US GDP figures. And on Friday, also key data will see the sunlight, which is US PCE inflation numbers. So now we will check the fundamentals for the Euro USD. The US dollar rose to a 1-month high against a basket of currencies, helped by the Fed's reluctance to meet investors' expectations as well as rising safe haven demand amid falling stocks in Asia, escalating geopolitical conflict in the Red Sea, and post-election tension between Taipei and Beijing. Donald Trump's unconditional victory in Iowa and the decline in inflation expectations in the euro area to the lowest levels since Russia's invasion of Ukraine played a significant role in the euro USD drop. Judging by the trend of European inflation and related indicators, the last mile of the fight against high prices may not be as difficult as ECB officials claim. According to the governor of the Bank of France, François Villeroy de Galhau, the inflation target has not yet been achieved and the central bank has a lot of work to do. A member of the Bank of Finland board, Thomas Valimäki, believes that it is better to wait a little longer than to abandon the current strict policy prematurely. Bundesbank President Joachim Nagel argues that markets can be optimistic or overly optimistic from time to time. However, his opinion does not coincide with the opinion of investors. Markets prefer to look at the data rather than listen to the speeches of ECB officials. The decline in consumers' annual inflation expectations from 4% to 3.2% and 3-year inflation expectations from 2.5 to 2.2% told them more than the central bank's intentions to postpone the time frame of the first interest rate cut to a later period. A change in market views is happening, but very slowly. Thus, the chances that the Fed will make its first move in March fell from 77 to 65% after Christopher Waller's speech. According to Goldman Sachs, his speech suggested that monetary policy easing would come later rather than sooner. At the same time, markets continue to forecast a 1.5% cut in the federal funds rate in 2024, and US stock indices are close to all-time highs. There is room for further re-evaluation and correction, including the Euro USD. If the price breaks out of the support at 1.09, the Euro USD bears will go ahead. If US retail sales data for December becomes further evidence of the US economic strength, the euro risks collapsing to 108, Wall Street Journal. The euro risks collapsing to 108. The Wall Street Journal experts expect the indicator to accelerate by 0.5% after its growth of 0.3% month-on-month in November. So I recommend holding down the shorts entered at 109 and adding up to them on corrections. And that will be all for today. Thank you for watching, and till next time.